Tata Motors? Well, that's one in focus because we've had an investor update. In fact, we've had the investor presentation which has been uploaded on the exchanges, and we have a handful of takeaways and a handful of reiterations too. Let's get in my colleague Puneet to tell us more about this one. Puneet.
Yeah, thanks for that. So one of the key headlines from this particular thing is that the India entity has now become net debt free. Now, this is part of a presentation which, as you rightly highlighted, which has come from the India presentation there that the company is currently hosting as of today. Now, apart from that, they have mentioned a few other details as well. As the India entity has become debt free, they're expecting Jaguar Land Rover also to become net debt free by the end of this fiscal year of 2025. Apart from that, they have said that historically the company has been bogged down by high debt as well as higher interest levels, which led to operational losses for the company. Now, that has certainly changed in this particular financial year, and we've seen that over the past 2 to 3 years, we've seen the change that has happened in Tata Motors. They have said that historically, apart from that, all the businesses are quite self-sustaining, and investment spends are also well funded by each vertical of the commercial as well as the passenger vehicle. They are saying that strong infrastructure push from the government augurs well for long-term growth of both the industries that the company operates in, and it is aiming to deliver over 25% market share across the addressable markets. Now, when you look at the fiscal year performance from FY21, we had seen that investments of roughly 2,600 crores. Now, that has gone up to all the way to 8,300 crores in this particular fiscal year. So over the last 4 years, we've seen that gradual increase. We've seen the free cash flow also substantially increase and almost double from the previous fiscal year of 2023 to come in at 4,900 crores. And this has led to a net debt reduction from roughly 15,500 crores in fiscal year 2021 to just like 1,000 crores of positive free cash flow in this particular year. So that has been a key effort of the company to reduce that. When you look at the financial growth metrics according to the presentation, revenues have gone up from roughly 25,000 crores to 43,000 crores in this particular fiscal year, and EBIT margins have reached positive or roughly 8.3%. This was just flat to 0.1% margins in FY20. ROCE is also strong at roughly 18%. And finally, I just want to spend a couple of minutes on the EV vertical. Now, very good data points that the company has highlighted. The total market share across the passenger and EV vehicles is 13.9%. And their share of EVs have gone up to 13% of all total sales. So overall, really strong picture coming in on financial as well as the electric vehicle for both the businesses that the company operates in.
Right. Puneet, thank you so much for getting us those updates. So actually a lot of takeaways from there. And I reckon there will be further clarity once we also have the demerger which concludes between CVs and EVs. But going forward, Raghvendra, how are you dealing with Tata Motors? What is your assessment here?
See, if you see the monthly sales number on last 6 months, Tata Motors have done fabulously well across the commercial vehicle space, across the passenger vehicle space. Specific to their Tiago model, they have a head start in terms of the electric vehicle as far as in the Indian geography is concerned. So we have a lot of positives coming from a good monsoon helping their CV space, a good head start in the EV space, helping on the passenger vehicles side. Now, if you look at overall Tata Motors Global, that includes the JLR business. So you have a company with a market cap of 3.6 lakh crore, or let's say from an FI point of view, broadly around $40 billion company. And in that, you as Tata Motors, you get a good China play through JLR, a good Europe play through, again, the Range Rovers and JLR, and the entire India across EV, PV, passenger vehicles and commercial vehicles. So in $40 billion, with a very good corporate governance of Tata Group, and at the top of affairs, Mr. Chandra, whose prime focus is on debt reduction, and the company has walked the talk, where the standalone India business is going for a debt-free. So if you consider the theme of cash is king, they have actually done very well. So currently the stock is trading at almost life-high levels, but any slight dip in the stock price to levels of 900, 920, it's a great buying opportunity. Slow and steady, we believe that this stock could do well. And it's a very good play on the Indian economy, the India automobile sector across passenger vehicles, commercial vehicles, as well as the electric vehicles. So we are bullish on Tata Motors, and they are doing the right thing in terms of debt reduction, in terms of expanding geographies, launching new models. So across Europe and Latin America also, they have now increasing their footprint. So Tata Motors would be a great buy at 920, 930 levels. But yes, it is an investment stock and should be owned in your core portfolio as well.
Okay, Raghavendra, well, hold that thought. We slip into a short break, and on the other side, we get you the balance of those stocks. Stay tuned in, and we'll be back in just a bit.